BlackRock, the biggest money manager in the world, is rolling out a new Bitcoin fund that promises regular payouts by selling options. In plain English, it trades future upside for smaller, steady returns. Do you think that this makes Bitcoin more attractive to cautious investors, or does it take away the very reason people buy Bitcoin in the first place? Number go up. What do you think?
Yeah, there's a lot to unpack here. I think what stood out to me first and foremost from this news and this headline was that, and you sort of hit on it. It's like Uncle Larry is serious about this. BlackRock's serious about it. I think there was some trepidation or just general concerns when BlackRock first filed for the spot ETF and really moved in. You had Larry Fink on CNBC, on Bloomberg, talking about Bitcoin as an international asset. And there was always something in the back of my mind, I would say just personally, of like, do they actually mean this? Does Larry Fink actually care about Bitcoin in that way? Does he really think it's the ultimate sort of debasement hedge? Or is this just, fodder to sell a product? Because ultimately that's what a lot of these issuers and TradFi players are entering this space, in mass right now because they think they can make money. It's not necessarily that they believe in the underlying theses of any of these coins or Bitcoin for that matter. They see an opportunity to make money. And particularly given the success we've seen with the spot ETFs, it's natural that you have, other players coming into the fold, whether they're trying to do, projects with stable coins or just offering trading of Bitcoin and Ether. It's indicative to me that they are serious about it. And the fact that they're doubling down on Bitcoin specifically, I think is notable. We've seen a lot of filings from other issuers over the past several months for like you mentioned, the 2x Doge ETF, the Solana ETF. I think all of those things will come. I think BlackRock is sticking their neck out and basically saying, we're going to double down on the king here and focus, a Bitcoin product in addition to our wildly successful spot ETF. And it's interesting as well because the massive success that the spot ETFs have seen. They're really the most successful product launches in traditional finance ever. By all sort of metrics. But the reality on the ground, and we'll get to this in some of the other topics too, but the reality on the ground is like the plumbing isn't fully open to these things even yet. Like it's still sort of moving slowly. A lot of wirehouses and brokerages are still, don't have ETFs on the platform, or even if they do, there's certain qualifications and they're not allowed to solicit investments into the funds. And so I think, all of that is to say we're still super early innings in all of this. In terms of sort of institutional capital flowing in, but it's these types of products that do get people excited. I think, and I think this particular product will generate a lot of demand, just given sort of what you outlined in the sense that you are giving up potentially some upside with a strategy like this, but some people genuinely just don't like the volatility of Bitcoin, and there's a whole slew of reasons why. Volatility does not equal risk. There's reasons how you can get comfortable with the volatility. It sort of punches up more than it punches down, which is very unique in sort of Bitcoin's characteristics in terms of its volatility in particular. It actually has a positive skew to its volatility. Most other assets in the world have a negative skew, and that's why most people associate volatility with something negative, prices going down, because for most other assets, that is the case. And so the other thing to note just around all of this is the concept of yield. And you kind of hit it on the head of like, is Bitcoin's returns not enough for you? And frankly, I think that this dynamic is more a function. It's less about people not thinking that Bitcoin's CAGR is enough. It's more the ingrained fiat mindset of someone operating in TradFi that they are so accustomed and taught to think about yield, think about cash flowing assets, that the concept of gold or Bitcoin is very foreign to them. And they probably also don't really understand Bitcoin to the extent you would need to have confidence in that CAGR going forward. I think that's the big disconnect as well, because, the common parlance in TradFi is, past performance is not indicative of future results. And so, someone looking at Bitcoin's price history, objectively speaking, it's the best performing asset over really any time horizon. The question in the TradFi allocator's mind is, well, how do I know this is going to continue going forward? And so that's always been the big rub is, well, I can't really depend on a 20 to 60% CAGR like you're telling me. Is there a way I can generate yield on this? And so that's really where we end up with a lot of this stuff is this natural inclination to think that something needs a nominal yield. And it's so ingrained in the zeitgeist that if you think about the entire fixed income complex and how a large swath of that is negative yielding in real terms, and no one cares, no one talks about it. People are still allocated, they're 60-40, and they know that their fixed income allocation is just bleeding over the past 5 years in real terms. You get your nice coupon with whatever interest rates are at now, but what is that in real terms? You are coming out net negative in real terms, and so I think it's just a natural disconnect, and I would expect to see more of these types of products because that ingrained thinking is not going away anytime soon. Like that is going to take years, if not decades, to sort of train people's brains out of that line of thinking.
Right. And as someone yourself who came from a TradFi background, how long did it take you, or how long do you see it's taking others to kind of wrap their heads around Bitcoin? Because it is fundamentally a different thing than we've seen in the past. And like you mentioned, the volatility, a lot of people would argue that the volatility of Bitcoin is one of its features, right? So like as someone who came from that space, how long did it take you to really get a hold on what Bitcoin is, enough to the point where you decided to switch your career or pivot in your career because of it?
Yeah, no, it's a great question because it doesn't happen overnight. Like I said, I started learning about sort of crypto in general in 17, 18, and I didn't even come to Bitcoin first, as many sort of Bitcoin maxi journeys occur. You start with the altcoin space. And so that was the same for me. I was, sitting at a bank in 17, 18, watching all these things run up in price. Funny enough, I really thought XRP was the thing. It was super cheap. And I was like, all the banks are going to use this. It's going to be the bridge currency. It's going to be great. And then everything started collapsing in 18, 19, obviously. And the one thing I noticed was, okay, everything's falling 75, 95%. Bitcoin is falling less than all of these other things. Why is that? And so I started to dig in more to Bitcoin specifically at that point in sort of that ensuing bear market into 19, and really started to learn about money. Most importantly, I had studied economics and history in college, and maybe there was a page in one textbook about Austrian economics, but that was probably about it. Was very indoctrinated with Keynesian sort of fiat thinking. And so it took me a while to really understand what money is even. And what that actually ended up doing is it sort of jaded me to my former occupation, my former role, when I started thinking in real terms, when I started denominating the S&P in gold terms over the past 50 years. And you start to think, well, why are we doing all these sophisticated strategies, finding all these, quote unquote, top tier portfolio managers to allocate capital to when you're really just keeping up with the debasement of the currency at the end of the day, being invested in the S&P over the past 50 years. So I started to sort of see the world for what it was. And that's a journey that takes time. It really doesn't happen overnight because I had to go back to, source materials, Austrian economics, understand what money is, and then start to piece together how Bitcoin, is this super revolutionary tool that is very different than the broader crypto space. And that's ultimately, I think, what the educational journey will be for a lot of folks in the TradFi space is, hopefully coming to gold and then digital gold being the trajectory, as opposed to what it really has been over the past decade, which is like crypto digital assets. Then maybe they get to Bitcoin is the thing. I think there's a lot of noise and distractions along that journey, as I lived myself. I think the better journey for these types of allocators is recognizing gold and then understanding Bitcoin as its digital counterpart. And you probably want exposure to both of those assets in your portfolio. If you're managing a diversified portfolio, you want to probably take something out of bonds, which again are negative yielding, and allocate that to hard assets, sound money assets, which really, if you think about, there's other precious metals obviously that are also running in the past sort of 6 to 12 months. But generally speaking, there really are two neutral reserve assets in the world. It's gold and Bitcoin. And I think the zeitgeist is waking up to that, particularly at sort of the government level. The central banks around the world have been stacking gold for the past 5 years. They're increasingly thinking about Bitcoin allocations. That is sort of in the zeitgeist, the sort of proverbial gun on the table, if you will, of sovereigns allocating to Bitcoin. Sort of the Trump administration really put the gun on the table. They haven't picked it up necessarily, but other people have noticed the gun on the table. Is basically the takeaway. And this notion of you probably want some amount of your reserves in assets that cannot be seized or controlled by the United States government. And so that's what we've seen over the past 5 to 10 years is these central bank reserves allocating away from U.S. Treasuries and towards gold. And, ideally Bitcoin is a part of that mix going forward. There's a Deutsche Bank research note just last week that said by 2030, they expect central bank reserves to hold both gold and Bitcoin in pretty large quantities. And so I think that's just part of the shift that's going on. But to the direct question around the education and how it happens, I'm hopeful, or at least optimistic, that we can have this trajectory of people recognizing gold and then Bitcoin as opposed to sort of crypto digital assets and then Bitcoin, because the crypto digital assets investment thesis is fundamentally different than a sound money reserve asset thesis. It's more of a venture style tech bet. If you're betting on any one of these protocols to, be a world computer of sorts, as Ethereum like to say, that's a hyper competitive space and will continue to be. In our minds, in my mind, Bitcoin has already sort of won the digital store of value thesis or form of utility. And sort of the rest of blockchain applications and utility is very much up for grabs and will consistently be in this sort of space of ever increasing competition, whereas nothing is really competing with Bitcoin for digital store of value.